So is the gold rush over? For more on that and strategies for investing in this space is Geert Rouwenhorst. He's professor of finance at Yale and a partner at Summerhaven Investment. Joins us now from New Haven, Connecticut. Geert, do you think right now that there is a bubble in the commodity space, particularly with gold?
Well, gold, of course, has become a very crowded trade. And gold is an unusual commodity in the sense that it's not really an input in the productive process like many commodities are. So gold is mostly a safe haven, and especially in situations when there's uncertainty about the dollar. So I think what we've seen last week is that we've seen some good news about the U.S. economy. We've seen some dollar strength, and I think both of these factors are bearish for gold.
Are bearish for gold, but how big of a picture is the question of dollar strength? We had it on Friday, we have it today, but the outlook for the dollar really up for debate right now. How big of a factor is it in the commodity space these days?
Well, it's certainly an important factor. I mean, many commodities are traded in global markets, and prices are set in global markets, and dollar weakness will tend to boost prices of commodities if you trade them in dollars. So I think the dollar is an important factor in most commodities. And when it comes to gold, for gold is an asset that doesn't pay dividends, it doesn't pay interest. So I think when there's going to be concern about interest rates going up in the United States, I think it'll be less attractive for investors to hold gold.
And we're seeing some of that conversation start to bubble up, given the jobless figures that we saw on Friday being perhaps a little bit more hopeful. But you hear from groups like Barclays saying, what, $50–60 billion going to be put into work in the commodity space in the next year. Do you think that that outlook dramatically changes should we see a rate hike ahead in 2010?
I don't really think so. I mean, certainly $60 billion, is a large amount of money, but it's really not a very large amount of money if you consider the overall size of the commodity space. The Bank of International Settlements twice a year releases a report that estimates the total size over the over-the-counter derivatives markets in commodities. And in its last report, it estimated the size of that market as roughly $5 trillion. So unless I have my math incorrect, $60 billion would represent about 1% of that number. And that doesn't even include other ways in which investors can take exposure to commodities, such as the equities of commodities producers and other direct private equity investments.
I want to pause for a second here and take sort of a step outside of the traditional commodity space. Reading today, the CFTC is forecasting that carbon trading will be the biggest part of the commodity markets within 2 years. Do you buy that?
I think it's clearly carbon trading. I think can only become more important going forward. Much of it, of the success of this market, is going to depend in the regulatory approach that regulators are going to take towards restricting emissions, obviously.